Thank you so much and welcome from my side. Yeah, fueling innovation, VCs and acceleration, always interesting, especially for the startups. And yeah, the last 10 years, a lot has changed in the space. But before we dig into the discussion, yeah, let's start with a quick round of introductions so that people at least know what you're doing. Markus, you want to?
Sure. Thanks for being here after the lunch break. Yeah, my name is Markus Hujara, working for Greenfield Capital. I'm responsible for marketing communications, not just for the brand, but also for our portfolio companies, supporting them with going to market strategies, branding, and stuff like that. Greenfield is early stage crypto investment firm, crypto only, since 2018, 50 plus early stage investments so far. Our latest product is kind of 135 million euros heavy, and so that makes us one of the largest European-based investment firms.
Hey, great to meet you. My name is Dominic. I'm a co-founder of Blockwall. We are also early stage VC based out of Frankfurt, Paris, Munich, and Berlin. We do pre-seed and seed only, Web3, but across the entire tech stack. We have 2 funds running and our 3rd fund, which we're just setting up.
Hey everyone, I'm glad to be here. I'm Radu, founder of Astrarizon. We are a VC, a private VC and a venture studio, so we are working very closely with our projects. We are more of an operator fund. We are quite excited about payments as well. We also own a payments company fully, and we started this 3 years ago. We backed more than 25 startups, and we are really glad to support these startups very closely.
Good afternoon, everyone. This is Vineet from Sigma Capital. I've been part of 2 funds in the Middle East before, and this is my 3rd fund. Been investors to startups like Sui, Peak, Casper, a lot of them. Currently running a $100 million fund. Looking forward to investing in the future startups, which would be liquid as well as venture deals. And just did our first 5 investments in the first close recently. Thank you.
Thank you so much. So we have like a lot of expertise here on the panel. So let's start with a high-level question, Dominic. After 10 or 15 years proof of concept, what are the real-world use cases driving innovation in the space at the moment?
Well, there's a lot happening underground to explain the new underlying movement across the internet infrastructure. But what we've seen emerging in the recent months and years is especially fintech related. That's where we see a lot of use cases happening, especially on the investment side, so tokenization, on the payment side, stablecoins. And just recently I had the discussion with the treasury from Siemens, for example. And for them, it's a true innovation because until now, they don't have global cash pooling, global cash management, right? They have bank accounts everywhere in the world. And this just-in-time cash management, which is now available through stablecoins, enabled them in their recent test case to send $20 million in 3 minutes around the world. So that was a true game changer. And combining this now with the programmability of tokenization also gives yield possibilities to them. And that changes the game, and that's how financial infrastructure should work. It should be as fast as innovation, and it should be a commodity, it should be cheap. And that's a lot of drivers where we see along the entire tech stack, we see many startups helping corporates doing this. Either you have big corporates like Siemens doing it themselves, but there are also many startups which are supporting businesses and private individuals doing this. And that's where we, for example, focus on then investing.
Thank you. So Markus, having a question in a similar direction, and I'm pretty sure it had already been mentioned, but stablecoin volume exceeded MasterCard and Visas together. So is this like one of the killer use cases, or what else is like going out or going on in the space?
Yeah, well, the short answer is yes. The very long answer follows now. No, I guess stablecoins is just the beginning of a new wave of adoption. And the difference from former waves of adoption is that this one is institutional-led. And why is that? So stablecoins is a wake-up call, I guess, for TradFi. Why is that? Banks realized that they are confronted now with a product which is just better than what they can provide with their rails, with the former financial rails we have in place. So it's cheaper, it's faster, It's more efficient all over, it's more transparent. So, and now banks have realized, okay, we have to change something. We have to look into that technology. And so each and every bank, which has kind of a global scale, now thinking about stablecoins, and not just about stablecoins, which is tokenized dollars, more or less. They think about tokenization. And we heard a lot about tokenization during this 2 days already, so I won't go into detail here. But this wave of adoption is institutional-led, and that's the real difference. And after that, we will see that the banks, TradFi, payment providers are on our side. They are not the enemies anymore, and that's the real difference. That's the game changer.
Okay, so grabbing the word of traditional finance, Vineet, how do we get that kind of money in the venture blockchain space?
So interestingly, what we have seen in this cycle is that a lot of traditional capital has actually come into crypto, but they've more come through the ETF route. You see the volumes on ETFs has been crazy. Then you also are seeing this play which is happening in the US, more of the treasury companies, the digital asset treasury companies. So money has come from traditional finance, but in venture, it hasn't been there. We still have the crypto bro money, these 30, 40, $50 million funds, which are crypto bros rotating their money. So for me, I think the best way to get this money, which I have seen in the last 4 months, we have raised a bit of a capital from people who are really traditional. A guy who has medical clinic chain in Dubai, or a guy who has $1.5 billion of cranes, construction cranes. The first problem is, don't talk about the money, talk about the industry. What does this do? Because till today, this is something that I have done in the past 6 months. I've actually met a lot of finance managers. I've met a lot of people who have bought into crypto assets, and I have asked them the first question, tell me what Uber does, and the answer is online taxi. Tell me what Facebook does, social network. Tell me what Ethereum does. 95% of the times I've not gotten an answer. I've just gotten a price. When I ask people what Bitcoin does, I hear things about decentralized, 21 million, but nobody understands or explains what Bitcoin does. So the first thing of getting them is to first make them understand what this industry, what this segment is.
Which is not that easy sometimes.
For me, it has been 6-hour meetings, and I've converted most of the people.
Okay.
Because you have to, when you say about stable coins, whenever you talk to a person, he says this is a cryptocurrency. Unfortunately, neither Bitcoin, neither these 5,000, 10,000 coins are currency. They are assets. And the currency is the stable coin. So it's explaining them, and then, when they get excited, the money comes in. And that's what we'll do over the next 10 years.
That sounds amazing. So, Alex, we all have heard the sentences, I don't like crypto, but I like blockchain several times. So what's the answer on that? And how to bridge it?
I like the saying a lot. I think it speaks a lot about the feeling in the space before, and now it's becoming a bit clearer for people what's the difference. And we've seen a lot of use cases that have been, like Markus has been saying, it's a wake-up call for TradFi, so many more use cases that blockchain enables. And I think what the saying is about is people like technology, they like blockchain. You cannot say I don't like the technology and the things that it enables, but they don't like crypto in terms of meme coins, all of the pump and dumps, the schemes that are happening. Each cycle we kind of see a different type of bad thing happening or something that ignites something. And I think this is playing an important role on the trust of the people that impacted the space, generally speaking. And the answer here is, I think, things are maturing. With each cycle, we see more and more it's tough. A lot of startups are building a lot of cool things. It's a lot more selective. And I think, generally speaking, it is going in a very good direction where we kind of see really high quality things happening, and it onboards all of these traditional players, enterprises, institutions, and so on.
Okay, Dominic, you want to?
Yeah, I just wanted to add to that, and that saying, I don't like crypto, but I like blockchain, summarizes what Vineet had also said. It's that people think, okay, if I invest in blockchain, then I invest in technology. If I invest in crypto, then I invest in currencies. And that's not true, right? So it's not as easy as separating the token from blockchain. the tokens are actually there by design, right? It's the incentive mechanism of a decentralized ecosystem. It's the incentivization of security, programmability in the blockchain. So how otherwise should you incentivize those people who are upholding the nodes in the network, right? So it's by design, it's not a mistake, and we just have to be there. There are of course some startups out there where the token is not necessary,
Sure.
but in the real blockchain cases where there is value accrual in the token, the blockchain and token economy are interlinked and not to be seen separately.
Okay. Vineet, you also want to add something?
So one of the interesting things, though, I think technology and understanding the technology is very critical. I am not discounting that. But when I went to these family offices, I just asked them one question. Do you want to understand how wireless works, or do you want to understand what does internet do to you? And they were like, okay. Well, I said, do you know how the router works? They said, no. I said, do you know that it gives you internet and you can go? They want to know the use case in there, not just the tech. But tech is important. I'm not saying it's not important.
No, it's true. And it's weirdly enough, if you talk to VCs investing in internet, nobody asks them to explain HTTP, right? Or SMTP. But nowadays, there's this phenomenon that everyone wants to understand exact detail of the tech, which is great, but you have to understand the use cases as well.
Maybe transferring a little more, especially to the VC part, and maybe also turning the tables a little, because quite often there are so many startups coming to you as VCs. But what can you as a VC do? And Vineet, you just talked already about people. So how can we help the entrepreneurs coming into that space to really work on real world use cases, to bridge that gap and to really have the right people in the right space?
So see, one of the things that I've seen in this industry is that, whenever the boom of crypto comes, suddenly all the Web2 founders want to come into Web3. Now, problem is they don't understand the difference between an equity and a token. For me, equity is ownership of revenue. Tomorrow, when Manchester United does $100 million of revenue, it goes to the owners. But token is ownership of process. Ronaldo is a process. He's bought for $1 million, and when he scores 100 goals, he becomes $10 million. So first, they have to understand and differentiate equity is different and token is different, and have to play the game differently. Just like in Web2, one founder runs the business and one founder raises capital. In Web3, certain part of the team builds the business and certain part of the team launches a token, which is completely different. But what I always love is there's Dima sitting there from Hacken. He was one of my previous investments. Multi-million-dollar annual revenue. How many of the companies in crypto can boast of a multi-million annual revenue? Less than 5%.
Agree.
So that's what we require. Great token launches, great products, and great revenue to back. And of course, the capability and capacity of founders to really build a multi-billion-dollar real company.
Got it. Thank you for sharing. So the panel is called Fueling Innovation, and how can VCs really live up to that role beyond money? So what is the function of a VC in the ecosystem, Markus?
Yeah, I would say, well, if you're a first-time fund, for example, it's totally fine to just give money, to just give venture capital to those good products. That's totally fine. But if we want to grow as an industry, become sustainable, become impactful, become strong, we need more than that. And this is what I call AAA VCs. And AAA would stand for, the first A would be advice, the second A would be institutional access, and the third would be advocacy. So speak a little bit about those three A's. The first one, advice. I mean, we have to see what a lot of smart people are in this room, are in this industry, but most of them, they are very young. They are not, they experienced with lots of companies and stuff like that. So we help them, we support them with our advice in terms of entrepreneurial advice, but also things like go-to-market strategies, tokenomics, blockchain infrastructure. We have a team of 20 people all over the place in Europe, just being there to support in the different areas, business areas, but also blockchain areas, but also entrepreneurial thinking. And this would be the first A. The second thing would be access, institutional access. So why is institutional access so important? Once again, if we want to grow, we need more money in the system, and that comes from institutional investors. So we have to open up, we have to speak, we have to communicate with foundations, with pension funds, and they don't visit events like that, so we have to go to them. We have to open up, we have to think about how we talk to them, maybe even what we wear. I don't want to wear my suit again, but still, this is something we have to think about to bridge this gap. And this is why like this access is important. And the third A, that would be advocacy. And this is something we failed so far. Greenfield failed and other funds too. We just don't talk enough about what this industry can do for Europe, what this industry can do to different industry sectors. And so we have to talk to politicians, we have to talk to different companies, ecosystems, and this is something we failed so far. We have to get better in that. So I would say there is no AAA VC yet in Europe, but this is something we should thrive to. So 3 things, advice, access to institutional money and the other way around, and advocacy for what we're doing here.
Maybe one thought on how to get better on the part where we failed until now?
Yeah, I mean, in Germany, we don't like this word lobbying. We think that's kind of, you know, wrong, but we have to do it. We have to be in Paris and Berlin and Brussels and be on the agenda, talk to politicians, explain, but it's not just about scams, but it's actually about, you know, helping European values, helping the European independencies. And it's happening, it's starting now. We have these conversations, we have these debates, but this is something we have to get better. And everybody, actually, everybody in this room, not just VCs, we have to be more vocal about what we can offer and have to offer.
Yeah, I agree. So, Alex, maybe to add from your end, because I know that you're working very closely, really working with founders and teams, and it was already mentioned they are often especially very young, which is something great on the one hand, because people are like super motivated, but on the other side, they always lack experience. It can't be different. So maybe what are your thoughts on that end? So what's your role? How do you really try to support hands-on those young teams and people that believe in an amazing idea, how to make things better or bigger or different?
Sure, thanks. And I'm really excited to answer this question because we are, like mentioned, working very closely with the projects from the venture studio perspective. We have also 10 guys around Europe and in US working very closely with our portfolio projects on a daily basis. We had the pleasure to work with some very technical teams and foundations like chains, DeFi projects, and on that vertical we kind of helped them a lot from like how to position the project, from like very, very complex like technical stuff to like how to position the go-to-market strategy, the narrative, the launch, and all of these things. Building an ecosystem, it's quite hard, as my colleagues here mentioned. I agree with what Markus said about like you need to lobby a lot and to like push your portfolio projects, and I think that helps a lot in terms of like the connections, introductions, and the overall like supporting the startups to level up their business model, to generate revenue, to launch. One very cool stat that I've seen recently, that in Washington there are 50,000 lobbyists every day to lobby their their business models, portfolio companies, and so on. I think that's really funny. I just thought about this while you were saying this. And yeah, I think that like VC is like not only about investing tickets, but also working closely with the projects, and that's why we have our model on our side.
If you would need to mention one thing why startups fail, what would it be?
I would say from the get-go, the business model that is like not done the right way.
Okay, got it. So keep it in mind. Coming a little to the topic of Web 2 versus Web 3, Dominic, how to invest and the cycles, especially also the topic of how the cycles change, how equity versus token is different. So because like if the Web 3, if there is a boom, people from Web 2 want to enter the space, and quite often they do not have the right knowledge. So what's the difference? What's a token game? So what do you need to consider as founder and also as VC?
Yeah, a very big question, and you can answer it from several sides, but to build on what the panelists here said as well. So first, as a VC, you have two types of customers, right? You have the investors, so you're offering actually a financial product to them, and you have the startups which you are servicing and you're investing in. And you're building that bridge. And if you think of it as a financial product, token actually changes the VC model to a certain extent. So if you look at exit times, fund return cycles, etc., and compare it to traditional Web2 VCs, you have exits after 8 years, 10 years plus, and even you have some funds still hanging on 2x multiple or even lower after 15 years. And that's not a sustainable model, right? Investors, first of all, the lockup is already a tough thing. And then if you lock up your money for 10 years, you don't want to be having a 2x return. So you're doing that for more, so excess return. And there, I mean, we start at the same pace as a VC. You do early stage investing. They're illiquid most of the time. And then token offer an earlier liquidity window, right? You have the token liquid market as exit market, and then you still have startups which go down the traditional VC market. And then it becomes as well, normally you have this black box, right? You have quarterly reportings or annual reportings which are delayed. Fair market values aren't depicted properly. In 2021, we have seen that there are valuations between VC funds which are sometimes 50% different, valuing the same company. So token as well offers a real life NAV, fair market value, to the investors, which is also a super transparent and from a financial product point of view, a great thing to do. And other than that, investing in my opinion, investing in token, you have to take the same approach, right? It's you're funneling, you're fueling innovation, you're investing in technology, whether it's a token business or an equity business, they're taking up money to build technology, to have runway, to prove a next milestone. So you have to ask the same questions. But in addition, with token, you can have the best technology, right? You can have the best team, but if you're not able to build a community, an ecosystem, then the token will not succeed. And I would say one of the biggest mistakes we have seen in token businesses is that they launch their token too early, before they have traction. So the same rules apply. It's the go-to-market decision, find product market fit, build traction, and then once you have traction, then you can go to the market. So what we're seeing is that they're actually staying private longer. I mean, I could go on and on, but it's maybe someone else wants to add in.
Yeah, happy to have some other opinions on that topic because I think it's a really huge one.
So one of the interesting things that a lot of TradFi people have asked me clearly is, how come the token launches like this and just goes cuckoo like
Love
this?
it.
So again, you know, this
Part
is
of the traction, yeah.
yeah. So, but this is where I explain why this is different. See, when you invest in a Series A of Uber, you know, 10 people invest, then 2 years later, 20 people invest in Series B, and 8 years later, 100 people have invested in Uber with the sole objective of making money. In this 10 years, 50 million people have taken a ride on Uber, and they understand what Uber does. On that day, the day this gets listed on an exchange, 100 people are selling and 50 million are buying. This is what real world is. Tokens are not like that. I am investing in a token right now. I've done 5 investments. They're launching in 3 months. Let's use common sense. If they are at a 20x, what am I supposed to do? I made 20x in 3 months. What am I supposed to do? Every normal person, unless he's God, would sell. So my point is, what happens is, this goes there and it starts going down because everyone's selling, we have to give money back to LPs. And this is where smart founders are critical. They build their treasury when it goes up, when it falls down, and you have to look at an example of Ripple here, I'll explain that. They keep building. You know, in a Web2 startup, you can pivot 3 times and no one knows. But in a Web3 startup, as soon as you pivot, suddenly Twitter goes crazy. So in these bear markets, you have to keep building. And Ripple went up from 10 cents to $3, came down, came with a narrative that will become Swift. And last cycle, it went to $2.4 or something like that. Again, doing Swift doesn't get retail involved and doesn't pump the token. Came back up, and now they're saying we are building a stable coin and we are building a chain. So it's the same 10-year process because, you know, you're building users. Only thing is you need to have treasury. If you die in between, it's gone. And that's what, you know, when Markus mentioned that in Europe we have to explain to people it's not a scam. First, we have to explain to people that startups fail. 95% startups fail. Failing is not scamming. Before you say some startup has scammed, please do an audit and see whether he scammed. If he paid salaries to build a business model and product market fit didn't happen, sorry, it failed. In Web2, it's acceptable. In Web3, it's not. So for me, you know, that explaining that cycles and how these tokens go up is important, and getting users in the end is the most important thing, and revenue.
Yeah, and this part is challenging because, I mean, the beauty of blockchain is that everything is transparent. Actually, you can see your traction. You can see, like, from day one, how many users you have. But how real are those users? And there, I mean, there's this meme that VCs are dumping on retail or like later investors, but actually everybody is dumping because the whole space is not about users so far. It's about airdrop hunters and other speculators. And what they are doing, I mean, when you are in Discord, the Discord channels of the different projects, what is the number one question? What would you say in this? When TG, when token? And that's the question number one, and not about the product, or not about like what kind of problem this product solves in the future, or what's the mission. Anyways, it's when token. So the challenge is really, I mean, we have to talk about this thing, product market fit, in a very tiny market still. Yeah, but some projects succeed. Some do that. Some really have this opportunity to see, okay, this is actually something that matters to people beyond getting rich. Yeah, and this is what we as VCs try to find out, which are the projects. And another challenge about the question, what to fix or what problem to fix, I would say the number one problem is that this industry founders, they love their product too much. It's different in like traditional tech. Those people are kind of entrepreneurs in terms of they want to get rich, they want to pivot when it doesn't work, do something else, fail fast. In crypto, you can pivot very fast, but people stick very often too long with their idea because they love their product so much, because they are techies and not entrepreneurs most often. And the other thing is, you said token really early, but we also have the problem that some of the projects, they just don't go to mainnet because they think, well, the product is not ready yet. We have to build the most beautiful, most perfect product in the world. And that's a huge issue. And this is something we want to help them test it. In the real world, you don't need a token for that, but test your product. And then you see without like the airdrop hunters, is anybody really using your product because he thinks it adds value to his life in some way.
And it's actually frustrating sometimes because you see a great product, great team, great traction, and then you have the speculation of the market, which are just trying to make that profit. And if you compare it, it's like a 3-year-old startup getting listed on DAX or Nasdaq. Of course there's volatility. Of course there are startups dying. Yeah.
So maybe a question in a direction we touched several times. From a VC perspective, you have like two different kind of duties. On the one hand, you have the startups and you want to support the startups. But on the other hand, you also have to return money to the investors, because if you don't do that, next time you don't get money, and then also the startups don't get money. So it's like a two-sided project, basically. What are your thoughts on that? How do you handle it? Like, open to all of you. What are your thoughts?
I would say the largest competition for funding is within the portfolio of a VC fund. Because of course we have a very strict triage. If they don't meet their milestones, they don't get follow-on funding. That might be a bad signal. So we don't follow on just because we like the founder. So I think that is, yeah, you just can't you don't have time, attention for every startup. In a typical portfolio size would be 30 startups. So you really have to figure out quite fast what are the startups you want to follow on with, what are the startups you also want to spend your time with and your dedication. And I think that is very tough for us as VCs because of course we build a relationship with the founders and for the startups as well because that competitive feeling is also not the greatest feeling, but they have to be aware of that.
Got it. Any further?
So for me, unfortunately, my loyalty lies to my LPs. It's only. Unless I don't have $100 million, I don't have money to give to you. And unless I don't give him the 4 to 6x or whatever X I'm talking about, there is no money. That doesn't mean that I don't support my startups. Most of I get allocations easily in the Middle East because every startup knows that I open up doors in the Middle East for people. But that's what I've been telling my startups. I know the market's going to turn in 6 months. I've been telling them maintain my NAV. I will see to it that 100 million will support you when the markets are down. So always loyalty to LPs and then support to founders. That's how I look at it.
I mean, you can't do it the other way around. It's impossible. So, yeah.
No money, no honey.
Yeah, that's fun. Markus.
Yeah, I think it's not a dilemma at all. I mean, first of all, we have skin in the game with our carry. Everybody knows that. So if the fund is successful, we are successful. So that, like, of course, the investors. And then we have early path to distribution. That's another beauty of crypto investments, that you can distribute really fast after 2, 3, maybe 4 years, if you have a successful portfolio, of course. And on the other side, there's one challenge. And if you're a crypto native fund, most advisors really love their job. And what they want to do is, because they're pioneers, you know, they are part of something new. And what they want to be sometimes is being buddy of the founder. But that's not our job. We are not a friend of the founder. We are his supporter, and we are here to ask tough questions, you know. And we have one KPI, and we call that proof of first call. And that means how many founders, when they have their next venture, how many founders ask us as the first kind of investor, do you want to be part of that project? And this KPI is pretty good with our like third fund right now. But that means that we ask tough questions and not our friends of them. And that's what a real relationship, a real partnership looks like. And so if we help our portfolio companies and founders, we also help our investors, I guess, I hope.
Okay, so as far as I know, we do only have 3 minutes left. We had some thoughts about also politics, like Mika. We talked about France. We also talked about Dubai because you're located in Dubai. So to have a last general question, and maybe you can bring in your specific angle, is if you have to place one VC bet today, and it doesn't matter whether it's region, sector, business, whatever comes into your mind, what would be your answer on that topic?
So it's one
question, actually. I didn't get the question. Could you?
Okay, so the main thought is like if you need to mention one topic that is the most relevant thing for the next 10 years to be successful as a startup and to be successful in the VC space, is it going to the right region, for example, living in Dubai and opening the business there? Is it building on the right blockchain? Is it going to the stablecoin direction? So I wanted to close with a little open question and your personal thoughts on the sector for the next 10 years.
One LP just asked me a few days back, how will you fail? What can make you fail? So my answer was only one, founder. I'm not in his heart to know whether he's here to scam or whether he's here to build. Yes, I can understand his capability and capacity. Capability means he has worked at Google for 10 years and he understands machine learning and he's building AI. This is capability. Capacity means he's ready to leave his family and friends for the next 5 years to build something great. And this is the only failure point that I have. A guy who will stick to it will really build great, but rest, He can build it in Uganda, Nigeria, anywhere, Moon also, it will work. He has to be an Elon Musk or an Eric Schmidt to build a big thing.
Okay, got it. Any other thoughts on how to be successful?
I would say open up the possibility to really engage also with the Web2 world, right? It's not this, there will be no banks or we're crypto against the Web2. And that was maybe the early founders in the day who are very politically or philosophically inclined in that area. But I think it's working together. And we now have this great technology at our hands. Everyone should be able to use it. Everyone should use it where it makes sense. And in terms of region, I would love Germany to actually accelerate. If I compare now Europe, we're seeing actually France being probably the most on-continent innovative state. So a lot of founders, a lot of innovation is moving there. And I would love to see that for Germany as well.
Thank you. Alex?
Yeah, I agree with Vineet in regards to like the founder mode and pushing things. I also like the example from Vineet when things are pumping and then it's done and you keep on going. You of course have to have a plan, have prepared for this kind of scenarios as well. But yeah, to answer your specific question, I think it's just keep on going, push things.
Agree. Markus, you have the very last word.
Yes, very, very last. It's blinking here. So,
Okay.
I agree, and I just want to double click on that really quick. Get out of this niche. We are ready, and we have to open up to everybody, to investors, to institutionals, to Web2. Just and what I say to founders: build something great, and not like the 1,000 iteration of some DeFi app that just is interesting for like 10,000 people. We need the big things building now. And the same goes for Germany. And I would say like France is leading right now in Europe, I agree. But we have to solve that on the European level. France won't be able to do it alone. And again, wake up call. Yeah, we have to act now to be a little bit of independent for Europe and have impact on the global scene. And the time is now.
Quick one. Interestingly, you said Germany. I don't know why Rocket Internet and Simon Brothers have not come into this space. Okay, people don't like them here, but my first internship was with Rocket Internet. They could have actually gotten blockchain and crypto in this region. They have the money power, they have the resources, and I've not seen them in the last 5 years ever in crypto space.
Maybe you have to talk to them and then you can convince them. Thank you so much. It was a pleasure. And
Thank you.
Thank you for listening.